We're joined by Scott Phillips from Motley. Scott, good evening to you. And the financial crime watchdog had a big influence on today's downturn.
Tomo, good evening. It certainly did. AUSTRAC is the regulator that looks after things like money laundering and counter-terrorism financing. It announced that the National Australia Bank, among others, including Crown and Sky City, was under not only investigation but enforcement action by the regulator. AUSTRAC has claimed some big scalps over the past few years, and that's got investors concerned, probably rightly so, with Westpac and the Commonwealth in the past having to pay big fines as a result of this enforcement action. Investors not liking that at all, and the NAB shares down about 3% today.
All right, now travel companies were also on the wrong side of the ledger.
They were, and this is something of a barometer, I think, of general feeling around COVID on the community. We saw Webjet, Flight Centre and corporate travel all down between 1.5% and 4% as the market digested the news that maybe with the outbreak in Victoria continuing to grow in terms of case count, there might be longer lockdowns and adverse impacts on travel, both within and outside Australia. It does tend to flick around a little bit, but today that was a bad day because investors worried that it may continue for longer than perhaps was previously assumed.
OK, now top honour of the day went to software systems company Altium, climbing close to 40%.
It's a heck of a day, isn't it? The $5 billion bid was made for Altium, or lodged for Altium, we should say, by Autodesk, the big computer design company out of the US. Altium at this stage actually saying no to that, if you can believe it or not. A 40% premium. The company saying still undervaluing Altium. Remains to be seen whether Autodesk comes back. Investors are betting they will, of course, because if Autodesk does walk away, those shares may well fall back most of the way.
All right, some interesting data out today. Let's start with credit cards. What's been revealed about our spending habits?
So this was really interesting, Tom, and it really does show to some degree, I think, the divide between who did well out of the pandemic and who struggled. We saw a lot of credit cards cut up. The numbers I saw this morning were 900,000 fewer credit cards in Australia, which is a really positive thing. But of those that remained, the balances increased to about $1,500 per card. So on one hand, we've got people saying, look, I don't need the plastic, thanks very much. Probably taking up Afterpay and others, by the way. On the other hand, those that are retaining the plastic cards are putting more on it. Probably those who've needed to increase their credit card debt as the pandemic's unfolded.
OK. Now, we got a big tick from S&P Global Ratings that will keep the federal government and the big banks happy.
It will. We love our AAA credit rating here in Australia. Of course, we kept it through the pandemic, which was something of an impressive feat. But S&P had downgraded the outlook to negative. In other words, they're pretty much flagging, look, you guys are keeping it for now, but we're keeping an eye on you because we think things will get worse. The good news today was that credit rating outlook, not the rating itself, but the outlook was upgraded from negative to stable, which means the S&P isn't worried about Australia. We don't run the risk of a justification, I suppose, reallocation of that rating down to a AA plus or something else. So that was positive for the government and the banks, and will also importantly mean that we're not going to pay higher debt on our national, not higher interest, I should say, on our national debt. All right.
Now, finally, what's the story looking like on Wall Street?
Bit of a flat start on Wall Street, like Tomo. The future's only up 0.05%, 1/20th of 1%. We'll call that roughly flat. At least it's in the positive.
Scott Phillips, as always, thank you.